Welcome and thank you for joining us. My name is Daisy. I'll be your host for today. Our discussion today is on inflation, high cost of living, and the impact it has on the real estate market. Joining me are experts in the real estate market, Miss Olivia and Mr. Pritt. Would you kindly introduce yourselves?
Thank you so much, Daisy. I'm happy to be here today. My name is Olivia Jamtai. I'm a senior property advisor at Val Real Estate, and I'm glad to be part of this discussion.
Thank you, Daisy. It's an honor to be here. My name is Prit Shah. I'm the head of sales at Val Real Estate. I've been in the real estate industry for 12 years, and thank you for joining us today.
All right. Thank you. So because we're discussing inflation, would you mind, Mr. Pritt, kindly defining for us what inflation is?
So inflation is a general increase in the pricing of goods and services. So as an example, if a good is worth price X today, and inflation occurs between today and tomorrow, the good will be worth price X plus the Y of the inflation tomorrow. So it's a general increase in the price of goods and services.
All right. And Ms. Olivia, high cost of living, how would you define that?
So ideally, the simplest way to explain the cost of living is just the average amount that anybody would be able to spend in terms of their living and what it would entail for them to actually upkeep a certain standard. So this would include maybe what you'd spend on a daily for your healthcare, food, transportation, just general things that are necessities for an individual. A good example for me to explain this would be the average cost of a person right now living in Nairobi would be an estimated amount of maybe $500. That would be in terms of, transport, food, housing, just an average amount that can allow them to, run their day-to-day activities on a normal day.
And you're saying $500 now. What was it maybe 5 years ago?
Could be possibly 20 or 30% less of the $500. It's just it's changed over time. It's been different from the moment we began up to how it's been right now. But generally, as you can see, there's so much that's happening. I think yesterday we just had a shocker that the flour has gotten to, I think, 210 shillings. I mean, way back, flour used to be maybe 90, 80 shillings.
Yeah.
So that's just quite high in order for somebody to be able to, maintain themselves and, take part in that cost of living.
So, Mr. Pritt, in light with as Olivia has said, that flour now costs about 200 shillings from about 90, 80. What would you say are the current causes of global inflation?
So generally, there has been an increase in inflation, not only in Kenya, as you mentioned, globally.
Yeah.
I think one of the biggest impacts that we have had is the Ukraine-Russia war, which has affected majority of the countries, Kenya included. Russia is one of the biggest producers of billets, which is a raw material for steel. And as a result, of stopping in supply, if I can say that, the prices now for billets has gone higher, and as a result, the price of steel has also gone higher. So generally, that's how it's affected real estate globally. Another big factor is over the last 2 years, which is 2020 and 2021, where we had a pandemic, there was a decrease in the general spending level of the public. But now that we're kind of moved on from this pandemic, most people are vaccinated now as well, or getting vaccinated. There is now a general increase in the spending of money, which we've seen this year, not only from our sales in real estate, which has doubled from last year, but generally across the entire market. A good example would be tourism. Last year, there was no tourism. So this year now, it has really flooded the market. And hence now, this has led to more money supply in the market and a general increase in inflation, which we're seeing not only in Kenya, but globally.
Miss Olivia, what would be your thoughts on that? Current causes?
Yes. I think just to build on what Prit mentioned was ideally there's a huge demand for the dollar right now. And unfortunately, the Kenyan shilling has actually dropped. And most of the supply in the market for people having money to actually be able to purchase things or be able to, money in circulation, for people to book places, like he said, tourism, there's a high like let's say for example somebody coming into Kenya right now would be looking to book to go to the Mara to look at the wildebeest migration. Trying to
Yeah.
book it right now is definitely impossible because it's fully booked out for next year. And that's just one of the things that's changing. Ideally, the changes of what inflation is bringing. Ideally, now focusing on what the dollar has become. A lot of people in the industry are complaining because they're not able to secure the dollar. There's quite a huge shortage of that, which just changes our industry as well as in real estate, because we also have to secure things like steel and cement, and part of our purchases on that would really be pegged onto the dollar. So those are some of the changes that are causing a huge effect on real estate as well. Furthermore, I think also price of the commodities, the increase and change of that, our purchase for such items and building costs are not as they were before. So it's just a different change that we're all adapting to that's just causing a rippling effect all through the whole market generally.
What would you say are the impacts of these causes of the inflation, especially on the real estate market because you're realtors?
Yeah. So I think maybe I could start off with in the real estate market, you could look at it as a positive. I know in other areas it would be a negative, but in the real estate market, it could be a positive because ideally for investors, let's just say you're looking to put your money into real estate, the first thing that you would consider is what are you getting out as a return? And because of the high cost of living, the price points that people are paying right now just to get into a 1 bedroom or 2 bedroom apartment would ideally cost much more than it cost before. So if you're looking to move into the high-end areas, which is where most of our projects are based, like Kilimani, Kilaleshwa, 2 bedroom would probably go for 95,000 to maybe 100,000 to maybe even 120,000, depending on the location. So as an investor, you're looking at what would your return on investment be. If you're to purchase this unit for maybe 11 million or 12 million, you're looking at a good return of investment of maybe, let's say 10 to 14%, which is higher than the average amount of what people get, which is like 6.5%. Generally, like last year, we had a lot of issues in terms of COVID, right? Who are the people who truly and a lot of returns during that period? It was mostly landlords. They really weren't affected with this. So the impact of every change that's happening right now, inflation and cost of living, anybody who's still investing in real estate won't truly be affected in terms of what they gain back in their amount, because they also gain that capital appreciation over time in the sense that they will still earn returns from their market depending on where they've purchased, and they would still have capital appreciation over time, and it's an asset that they'll take care.
Oh, all right. Thank you. Maybe Preet would give us a negative.
So just to add to that,
Okay.
more of negative and positive as well. For starters, if you're thinking of buying, right now would be the time to buy. The two main reasons for this. All right, we mentioned the increase in the price of steel, right,
Yes.
which is a main component in terms of a construction cost. On top of this, it's not just the steel; it is the cement, it's the cost of finishing, and we can even break that down further. So all our finishing, for example, majority of the high-end developers, they get it from overseas.
Yes.
Now you have to transport that here. We've seen a rise in the price of oil as well. So just generally, the inflation and the costs are increasing. And what you see today will not be the price tomorrow. So if you are looking at buying, it would be the perfect time now to avoid any future price increase due to factors which we cannot control.
Yeah.
There is also a new trend which is happening in Kenya. Most of the developers are now changing their prices to dollars.
All right.
So now this is as a result of the inflation and the foreign exchange instability, if we can say that.
Yes.
When we change the price to dollars, we peg the dollar to a certain rate. And it doesn't matter if it changes due to inflation or whatever reason, it is pegged at that rate. So before this actually comes into full-fledged into the market, take advantage of the inflation. Make your negative into a positive. Yeah.
Ah, all right. So if I had 50,000 USD right now, how would you advise me which route would you advise me to take in terms of investment as a realtor?
Okay, not to sound biased for real estate, we'll delve into a couple of the other markets. So, for example, we have the stock market, we have government bonds, fixed deposits if you're going the really safe way, and other couple of assets which you could own, and they would return you dividends. Um, Though there's something which sets real estate apart from all of these markets. So, for example, if you're putting your money in a government bond, for example, you will earn 12% as your interest. Now, the 1 million shillings that you put today, and you want to collect it after a year, due to inflation, it's actually not worth 1 million anymore, right? So,
Yeah.
what you've collected is your dividend or your return. But what you're going to get back, your principal will not be that 1 million. If we
Yes.
look at real estate on the other hand, the 1 million you put now, because it is an appreciating asset, it will be worth 1.1 million next year. So you've gained in that capital appreciation. It's
Yes.
about 10% annually in Kenya. On top of that, you've collected the rent for that 1 year as well. So this is, you can compare it to the dividend you're earning in the bonds. So with the bonds, you will only earn the dividend, but you will lose the value of your money. With the real estate, you will appreciate the value of your money when you sell it again next year, plus earning the dividend or the rent. We could look at, let's say, for example, the stock market as another example. The volatility experienced in the stock market is 100%, because like when the pandemic hit, for example, or for example the Russia-Ukraine war, stocks plummeted everywhere because the cost of doing business became higher. If you look at real estate, the volatility happens over 10 years, for example. So it's a very slow decline, which you can actually foresee in advance and take advantage by selling off your asset. It won't just happen like in a day, like the stock market. So this is why I would always recommend real estate as your number one asset, and then you can follow that by diversification into more riskier assets.
So in light with now being the right time to invest, what does Val offer to an investor looking to buy property or live in that can accommodate their needs?
Okay, so for this question, I'll probably tie it down to initially the topic of discussion, which is cost of living and the inflation. One of the impacts that I mentioned that would favor investors is that you're able to get a high return on a high risk investment, right? So Elite is one of those high risk investments, which would definitely give you a high return. You're looking at a purchase price of maybe 120,000, but you're looking at a return of maybe between $1,500 to $2,000 a month. That gives you a good return of maybe 10 to like 12 to 13% if you're looking at your return on investment. But now, if I could dive into what Elite is about. It's a 1 and 2 bedroom apartments, which are located in the heart of Westlands, just behind the Villa Rosa Kempinski or the GTC. It comes with amazing amenities and features that would be very attractive to an investor. You're looking at an amazing heated pool on the rooftop, panoramic views from your gym, which are at the rooftop as well. It's a 20-story building, so you can imagine what it would look like once you're at the top. It has a children's play area, a beautiful barbecue area where you can just be grilling your food at the rooftop, looking at everybody from the top. It has state-of-the-art finishings. We have, fixtures like Bosch appliances. We give you an oven, a burner, an extractor. We even throw in a washer and dryer for you, which means as anybody coming to stay in your apartment, most of the fittings have already been done. So you're just doing a bit here and there just to ensure that the stay is comfortable. Location-wise, it's easy access to like the GTC mall. You can easily get to the airport if you want to get in and out of Kenya. It's in a work and play environment if you want to visit scenic places or entertainment places within Nairobi. It's in Westlands, so it's a fantastic place for someone to consider as an investment. We do have other projects as well, which wouldn't be in Westlands, called Wilma Towers. This is in Kilimani, but this one offers people like a longer range in terms of payment. it's still upcoming. It gives, it gives somebody that feeling of hotel amenities where we've added things like a sauna, a steam, an indoor basketball court. We have children's play area. So it's just places that we've built with thoughtfulness in terms of where the world is going right now, because people work from home. So all these features and amenities are what you'd consider if you'd want somebody to sell you something where you can have a place, but you can enjoy all these amenities within your place, and also buy it at a good price as because it offers great features and great amenities as well.
Okay, Preet, now that Olivia has given us the investing side, give us the living from Val.
So yeah, from the live-in aspect, we have our first ready project, which is in Kileleshwa. Was ready in October 2020. It's called Moon Valley, the Dubai-style apartments. So just to touch on inflation and, for example, our product Moon Valley. So in October 2020, we sold a 2-bedroom at 14 million. The same 2-bedroom last year we sold at 15.5 million. And the same 2-bedroom this year has fetched up to 17 billion. Now, part of it has to do with inflation. There is a general rise in the price of a good. In addition to inflation, there is, of course, the rising demand. There is the rise in the cost of doing business, so which is the cost of the steel, the finishes. We also this rise in the cost has meant that the 17 million has been achieved this year. To take you back again, the inflation is a part of it. You could expect the same unit to retail for 18 million next year.
Right.
So the second product we have is Divine Residences by City Blue. This is actually a unique concept in Nairobi. We've looked at it in terms of the investing aspect and also the self-occupation aspect. So it's the first concept in Nairobi, hotel concept, where you can actually live in these apartments and enjoy all the amenities which come with a hotel, including, for example, daily cleaning, daily laundry. We have the restaurant where they offer bed and breakfast and any general amenity which comes with the hotel. So it makes it a very unique concept, and we call it the best investment in East Africa. You can earn up to a 15% ROI or gain value from living in these units themselves. The Divine Residences, we're expecting a 20% increase in prices from this year and next year. One of the main reasons, again, has to do with inflation and the higher cost of living. So this is one product which I would say you should definitely come and see. See if it matches your need in terms of living in or buying as an investment, or even both. You could do half and half, especially as a foreign investor. And to touch on the tourism aspect, we're expecting a huge inflow of tourists. We've seen that this year it'll become bigger next year as well. And this will only complement the Divine Residences in terms of occupation and how you can get your money back. And if I say 20% capital appreciation, the ROI is 15%, you are kicking inflation in the foot, and trying to beat that by ×2.
Yeah. So you're saying people buy into the hotel industry?
Yes. Well, actually, the only opportunity is with us as Val Real Estate, because any other hotel concept is actually owned by an individual or a family. So this is actually your only opportunity to buy into a hotel concept, which is internationally managed. We have 2 partners, City Blue and Valor Hospitality. They are the hotel people of the world.
All right. Well, thank you guys for joining us. As you've heard from Olivia and Mr. Preet, thank you so much for this informative conversation. They're telling you can get 15% ROI on your investment. I think you should contact Val on all of the social media platforms. Val Real Estate Kenya, right?
Yes.
And their contact number is 0725 111 444. And that's it for now. Thank you and see you next time.